Okay, so good morning once again. So let us continue our discussion for um, notes payable. So continue with the example. Okay, so our next case would be, okay, non-interest bearing note siya pa rin. In exchange for a property, in exchange for an equipment pa rin. Okay, at this time, yun nga, non-interest bearing siya. Um, Katulad nung example natin from the last video wherein interest bearing siya, no? So, again, ang rule natin dito, um, if it is a non-interest bearing note, okay, if it is a non-interest bearing note, then the fair market value, okay, the fair market value should be equivalent to your cash price, okay? Or basically, the note should be measured at your cash price. Diba? So, okay. In this example, let's say, same date pa rin tayo on January 1, 2020. Okay? This time, in exchange for the equipment, well, the borrower, okay, kumbaga, inutang niya amounting for 500,000. Okay, inutang niya for 500,000. However, the terms of the liability or the terms of the debt requires a down payment of 100,000. Okay? Next, again, cash price is 350,000. The term is 4 years, which um, the 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 notes payable to be paid in 4 years annually every December 31, or at the end of the year every December 31. Okay. So, the first thing that we need to do here is that basically, because there is a down payment of 100,000, we will determine, okay, we'll have to determine what is the remaining amount of the note payable, which is, di ba, yun nga, sabi natin, yung note payable is to be credited siya at face amount. So, kumbaga, the first thing that we need to do is to compute how much is the remaining face amount, no? So, obviously, nang dali lang yung computing, if we started with 500,000, then may down payment na 100,000, meron tayong remaining amount ng notes payable na 400,000. But do not be confused, ha? Do not be confused. Ang concept kasi nito, okay, ang concept nito, if we purchase an equipment, tapos inutang natin, diba? Tapos, non-interest, in exchange for a non-interest bearing note, the equipment is to be recorded at its cash price. Yun siya, under PES 16. Okay, under PES 16. Cash price. So, meaning, if that is the case, basically, the note, ang value ng note natin is at 500,000. Okay, at 500,000. Yun nga lang, may down payment tayo na 100,000. At diba, yun nga, sabi din natin na if it is a non-interest bearing note, the fair market value of the note is to be measured also at cash price, which at the same time is the fair market value of the equipment. Okay? Of the equipment. So the point is, if we have a face amount of the note, okay? If we have a face amount of the note na 500,000, Then, the fair market value of the note, the same with the fair market value of the equipment na 350,000. Then, we have a discount on note payable na 115,000. Okay? We have a discount on note payable na 150,000. So, on January 1, 2020, if date of issuance of the note or the date of acquisition of the equipment, basically, our debit would include a debit to equipment at cash price 350,000. Kasi nga, ang sabi is, under PS 16, equipment purchased in exchange for a non-interest bearing note should be measured at its fair market value equivalent to its cash price. So ito, debit equipment, 350. Then we will credit notes payable yung remaining balance na 400. Diba? See, may down payment tayo na 100 eh. So, debit 400,000. Then, credit yung cash, which is yung down equivalent to our down payment na 100,000. So, kung titingnan natin, ano yung pang-balancing entry natin dito? Yung discount on notes payable na as computed 150,000. Diba? So that is on the date of issue or original issuance. Now, kasi nga, every December 31, annually yung payment sa principal, we also have to be congruent with that particular payment, we'll have to amortize this discount at the end of every December 31 para diretso na tayo, wala na tayong any adjustment na kailangan. So, diretso na amortization. So, on December 31, okay? On December 31, 2020, we need to make an entry for the amortization of the interest. Now, for practical reasons, okay, we will use the bond outstanding method because anyway, installment naman yung term nito. Tapos, let's say wala tayong binigay na mga effective rate kung ano pa, di ba? So, for practical reason, we'll use the bond outstanding method. So, paano yung ginagawa yung bond out, not bond outstanding method. Okay? The outstanding balance method of amortization. Okay? The outstanding balance method of amortization. So, basically, kung tingnan natin, para lang tong effective interest, but simplified, no? Wherein, we'll use a fraction based on the outstanding balance annually. Okay? We'll use a fraction based on the outstanding balance annually. So, kung baga, diba 4 years yun? So, we will have 4 years. So, 2020, 2021, 2022, then 2023. This is the year where we have outstanding balances. So in 2020, obviously the outstanding balance is 400. Then because 100,000 annually, in 2021 300, 200,000, and so on. Okay? Then the fraction, to get your fraction, we need to total this. So that is 4 plus 3 plus 2 plus 1. So that is basically 1 million, diba? If we are to fraction it, this would be 4 over 10, 3 over 10, 2 over 10, and 1 over 10. Okay? So, the total amount of discount that we need to amortize, diba, that is equivalent to 150,000. So, the point is, in 2020, the amortization of this 150,000, that is computed as 150,000. Ito yung amount na i-amortize natin times by the fraction. So, 4 divided by 10. So, that is 60,000. In 2021, the fraction was 3 over 10 or 3 year over 10 years. Diba? So, 150,000 times 3 divided by 10. So, that is 45,000. In 2022, the second year, prior to maturity, we have 150,000 times 2 divided by 10. So, that is 30,000. And in 2023, the last year, we'll have 150,000 times times 3 divided by 10. So, that is, times 1 over 10 pala. Okay. 150,000 times 1 divided by 10. So, that is 50,000 for a total of 150,000. So, how we recognize that per entry? Okay? So, per entry, on December 31, will debit, December 2020 tayo ha, debit, interest, expense, credit, discount on notes payable, at the amortization for 2020. Then, next entry natin would be to recognize the payment, the principal payment, which is to debit notes payable, credit, cash at 100,000. Kasi nga, 100,000 annually. Diba? On December 31, 2021, the second year, ito na yung gagamitin natin. Diba? So, the entry is debit, interest, expense, credit, discount on notes payable na 45,000. Then, for the payment, debit, notes payable, credit, cash. Again, 100,000. Okay? On 2022, still at December 31, debit, interest, expense pa rin, credit, discount on notes payable, let's say, magkano ngayon? 30,000. Then same, notes payable, credit, cash at 100,000. On 2023, the last year, diba? Last year na tayo. Debit, interest, expense, credit, discount on notes payable, which is, if titingnan natin yung amortization natin table, 15,000. Diba? Then, debit, notes payable, final payment, 100,000. So, yun. Pag given yung cash price. Now, the next issue, okay, The next issue that we are to encounter with notes payable is that what if non-interest bearing pa rin, okay, non-interest bearing, pero this time, no cash price. Okay? So, point is, if this is now your scenario, or this is the scenario of the note payable issue, walang cash price. So, we will use now the concept of the present value. Okay? Okay? Present value using the existing market rate, or kung applying the concept of bonds payable, effective rate. Okay? So, let's have an example. Okay? Let's have an example. Wait. I'll get muna the example. So, okay. So, let's say, okay, yung amount na inutang, okay, yung amount na inutang, let's say, 1 million. Yung term is 5 years pa rin, okay, annual payment every December 31. So, same pa rin siya. Okay? But, ang kaibahan lang dito ngayon is that walang down payment, let's say, walang down payment, then, walang cash price. Okay? Walang down payment, walang cash price. So, ang existing financial, ang existing instruments, like this one, okay, typically has a market rate. Let's say, for example lang, ang market rate is 10%. Okay? So, how will we do this? Okay? So, number one, let's compute for the annual payment first. Magkano yung annual payment na required? So, basically, that is computed as the amount of loan na 1 million divided by 5 years. So, that would be 200,000. Okay? That is your annual payment. The next procedure ngayon is to compute for the present value, which we will use because installment nga to, annual, present value of an, okay, present value of an ordinary annuity. Kasi nga, hindi siya lump sum payment. So, present value of an ordinary annuity. At using the effective rate of 10% for 5 periods. Kasi nga, 5 years, annual yung annual installment. So, let's compute for this. Okay? Let's compute for that manually. So, again, 10%. So, that would be 1.10 divided by 1, 2, 3, 4, 5. Minus 1 kasi nga, ordinary annuity divided by 0.10. So, you will have the present value factor is 3.79. Okay? The present value factor is 3.79. Let's just round this off to 2 decimal point. Okay? Now, to compute for the present value, the annual payment multiplied by the present value factor of an ordinary annuity of 1 at 10%. So that is 3.79. So the present value ngayon, which is equivalent to the fair market value of the notes payable and the equipment, okay, is computed as 200,000 times 3.79. So that is 758,000. Okay? So, face amount, okay? Face amount of the note, which is 1 million, minus the present value of 758,000. Okay? We have a difference of 242,000, which is this will be our discount on notes payable. So, with that, we can now make our entry. Okay, we can now make our entry. So, on January 1, 2020, we will debit equipment again equivalent to your present value. Okay, under the guidance of PAS 16 yan siya. Which is at 758,000. Then, credit your notes payable. Again, always at face amount. Do not forget that at 1 million. Then, we'll debit discount on notes payable. Okay? Which is at 242,000. So, that is our entry on the date of issuance. Now, the next problem here, since this is our initial recognition, subsequent measurement, which is on December 31, 2020, and so on. So because we have used the concept of present value, practically we cannot use the outstanding balance method. So we'll now use the effective interest method, okay? So the effective interest method for this, well, I know now you are familiar with it now because we have lengthily discussed that concept during the topic on bonds payable, di ba? So, reiteration lang. So, start with date, okay? So let's start with date. So, we have 12, 31, 2020, 12, 31, 2021, 2022, 5 years yun, di ba? So, okay. So, 5 years. Then, this is 1, 2, 3. 1, 2, 3, 4. Last year would be December 31, 2024. Okay. Wait. Okay. Now, there is an annual principal payment kasi nga installment yon, di ba? So, in December 31, 2020, we'll have 100,000. Wait. Let's just para mas klaro eh. So, 12/31/22, 12/31/23, and 12/31/24. Date of issue, original date is 01/01/2020. So again, we now have principal payment at the end of the year kasi nga annual installment. So that is 200,000, 200,000, 200,000, 200,000. Okay? Then, this is your interest expense. Now, wala tayong interest paid dito kasi yun nga, this is a non-interest bearing note. So, what we will have is just an interest expense representing the amortization of your discount. Okay? Then, we have the carrying amount. Okay? So, on January 1, 2020, the carrying amount is 1, di ba? 758,000. Okay? 758,000. Okay. So, kumbaga, ang interest expense natin dito, that this should be based on 10%. So, 758,000 times 10%, that we have 75,800. That is for December 31, 2020. So the concept dito is, okay, if we are to apply the effective interest method when it comes to notes payable, okay, this payment of 200,000 basically, okay, includes the payment applicable for the interest. The excess is for the principal. Okay? The excess is for the principal payment. Actually, yung correct term na dapat i-maintain dito is not principal payment but installment. Okay? Then, interest, then for the, now let's just arrange shall we. So, we have interest applicable to your principal, then the carrying amount. Okay? We have your carrying amount. Okay? So that means 200,000 installment, 75,800 daw dyan, applicable to your interest. So, the remaining principal basically is your, or is computed as 200,000, okay, minus 75, 800. So that would be 124,200. Okay? That is 124,200. If you have a carrying amount of 75,800, 758,000 dito, okay? Because it's payment na, the carrying amount of December, as of December 31, okay, as of December 31, 2020, okay, as of December 31, 2020, that is computed as 758,000 less the applicable installment for the principal na 124,200. So the balance is 633,800. Okay? Kuha. So let's repeat. Ito yung annual installment natin. Kumbaga, because we will amortize the discount advance payable, that means na itong payment natin na 200,000, meron diyang applicable or meron siya dyan dapat i-apply for the interest, which is equivalent to the 10% using the effective rate. Okay? 10% of the carrying amount. So that is 75,800. Diba? 75,800. So the amount applicable for the principal is only 124,200. Okay? So if we continue this, okay, so 633,800 times 10%. So the interest in 2021, that is 63,380 minus 200,000. So we only have 136,620 plus 6 minus 633,800. So that would be 497,180. Carrying amount as of December 31, 2021. Multiply again by 10%. So 49,718 minus 200,000 installment. So the applicable for principal payment is 150,282 minus again the carrying amount because that is a payment. So we now have 346,898 balance on December 31, 2022. Repeat the process times 10%. So that is 34,690. Round off na lang natin, ha? Minus 200,000. So that is 165,310 applicable for principal plus 346,898. So we have 181,588. Magkano to? 18588. Okay? Okay? So, in the final year, okay, diretso na lang natin to na i-round off because 200,000, yun nga, we need to make sure na this is 0 dito sa last year. So, diretso na lang tayo, 181,588 minus 200,000. So, the applicable for interest as of December 31, 2024, that is 18,412. So, principal, obviously, that is 1,588. So, this is now 0. So, that is your effective amortization schedule. Okay? So, if we are to call this, journalize this, okay? Okay. Excuse me. So, debit, interest, expense pa rin tayo. Okay? Then, credit, discount on notes payable. Ha? Based on our interest schedule na on December 31, 2020, that is 75,800. Now, for the payment, okay, debit, notes payable, credit, cash, annual installment, 200,000. Okay? On 12/31/2021, debit, interest, expense, credit, um, discount on notes payable. Okay? Ito, 63,380. Okay? Then, another entry for your installment payment. Notes payable, credit, cash na 200,000. And so on. Okay? So, yun siya if um, non-interest bearing siya, no cash price. So, madali lang, di ba, no? So, basically, that is the concept for your notes payable, okay? If amortize cost, okay? If amortize cost now. If on the other hand, okay, if on the other hand, the entity irrevocably designate your financial liability, in this particular, the notes payable, as fair value through profit and loss, then obviously, wala na tayong ginagawa ng mga ganito. Okay? But instead, we will only recognize fair market value. Okay? We will only recognize fair market value. So, kung baga, annually, okay, yearly, we will compare each fair market value. Okay? Annually. Any changes, okay, any changes in the fair market value is to be presented in general, okay, in general sa profit or loss. Okay? However, if the change in the fair market value, okay, if the change in the fair market value resulted, okay, if it is determined na nag-change yung fair market value natin because of credit risk, okay, because of credit risk, the change in the fair market value is not to be presented at profit or loss, but rather to be presented at our other comprehensive income. Okay? Klaro yun siya. So, example. On 2020, the fair market value recorded with our notes payable, let's say we have 2 million. Okay? In 2021, let's say the fair market value is naging 1,900,000 na siya. So, we need to recognize the change of 100,000 because yun nga, we initially recorded it at 2 million pero ngayon, yung fair market value niya is 1.9 million na lang. We need to convert the balance of the note payable to 1.9 kasi nga, we choose to present our note payable at fair value through profit or loss. So, recognize the 100,000. Now, this 100,000, basically, ang nangyari dito, okay, because bumaba yung fair market value niya, this is a gain. Okay? Gain on fair market value change. Pag tumaas yan siya, obviously, that is a loss. Diba? Kasi ang concept is, pag bumaba yung utang natin, obviously, liliit yung babayaran. Yun yung concept. Diba? Gain on our part. Pero pag tumaas yan, loss on our part. So, in this particular example, this is a gain on fair market value change. Now, if this particular gain, let's say, 40% of this was determined because of credit risk, while the 60% regular as is. 40,000 will be presented as gain through OCI, while 60,000 will be presented regular profit or loss. Diba? Naalala niyo yan? Concept yan siya sa bonds payable, diba? With our previous discussion on bonds payable. Financial liability designated at fair value through profit or loss. Okay? So, I guess that's it for our notes payable. So, I hope you have learned something, no? Though medyo short lang yun, but still, I hope you have really learned something. Okay? So, thank you. So, see you in the next discussion video. So, I hope na you would religiously internalize the discussions or the discussed topics. So, I guess that's it. So, good morning once again.